Welcome everyone to our video conferencing meeting where we will discuss federal support programs for business in relationship with the COVID-19 pandemic, which has had a major effect on every business within our membership and across the country. I would now like to introduce our presenter, Brad Severin. Brad has over 25 years of experience as a taxation specialist. He has completed the Canadian Institute of Chartered Accountants in-depth taxation course and the Advanced Corporate Reorganizations course and the Advanced Wealth Management course. He specializes in consulting in the area of Canadian and international taxation matters, including corporate reorganizations, mergers and acquisitions, and succession planning for family-owned businesses. A former high school teacher, Brad has been a lecturer for the Chartered Professional Accountants of Alberta, the Chartered Professional Accountants of Canada, the Canadian Tax Foundation, and has been a frequent advisor to the media on income tax matters. Brad has been very involved in the communities and has been active on several boards of nonprofit organizations. He has had a remarkable career to date, having been described in Parliament by former Federal Finance Minister and Prime Minister Paul Martin as an eminent tax accountant, and that's in Hansard, March 2000. And this was for his role in recognizing and responding to the 2000 federal budget's taxation inequity for Albertans. Brad was named to the Alberta Venture Magazine's list of Alberta's 50 most influential people and was named a recipient of the Institute of Chartered Accountants of Alberta's Early Achievement Award. Brad has also chaired the Alberta Chambers of Commerce, served on the Canadian Chamber of Commerce Finance Committee. Brad currently sits on the executive of the Sherwood Park and District Chamber of Commerce as our treasurer. Before Brad takes over with this presentation, I would ask everyone not to interrupt Brad during this presentation, but please write your questions down in the chat window and Brad will address them at the end of his presentation. The presentation and Q&A will finish at 5 p.m. Brad, welcome, and we look forward to your presentation.
Thanks, Todd, and thanks everybody for joining us this afternoon. I know that this stuff is evolving quickly. You know, you've heard it so many times now, and I'm going to say it again. We are in an unprecedented time. The fact that we have to rely on news releases and or news conferences and press releases to move legislation forward or programs forward that ultimately at some point will become legislation, we're hoping. It's a little bit challenging because we're not really sure what it is that we're dealing with. As I said, they're making this stuff up as they go along. And I think that that's what makes it so confusing for business owners. They know that there's something out there for them. Individuals, same thing. They know there's something out there for them, but they're not really quite sure whether or not they're eligible, whether their business is eligible, how to apply, how to access the programs that are being developed on the fly. So I'm going to take a little time here to hopefully fill in some of the gaps, give you some updates, and then maybe, well, certainly I'll take any questions that you have, and if you have concerns about how they might apply to your own situation, I'd be happy to answer those questions. So I've got a short presentation that is about 11 slides long, and we'll go over them fairly quickly. It's a very high-level analysis of the programs as they exist at the moment, and then we'll talk a little bit about how things are evolving. How did we get to where we are today? Really, we only have two pieces of legislation that are on the table and have passed through the legislative process. Bill C-13B, Bill C-14. This all started on March 18th with the introduction of Canada's COVID-19 Economic Response Plan, which was cobbled together apparently fairly rapidly to form some form of response to the deteriorating economic circumstances of the country. And in that early response plan, we saw things like the deferral of tax filing and deferral of tax payments, enhanced GST, HST credits. Nothing really substantive for businesses or individuals, just sort of a heads up saying, well, we're thinking about it. We'll get to it. But this is our response plan, and we'll have it evolve as we carry on. By March 25th, the substance of what they were speaking of, Bill C-13, an act respecting certain measures in response to COVID-19, was passed, received royal assent. And in that, we had the fundamental framework for the Canada Emergency Response Benefit and also the temporary wage subsidy. That was the 10% subsidy, and I use that in air quotes because really at the end of the day, it's an employer-funded subsidy, and I'll talk a little bit more about that in a bit. By March 27th, a news conference occurs on the steps of Rideau Cottage, as we see them on a daily basis. And there's the announcement of this Canada Emergency Wage Subsidy, the CEWS, which is purported to provide 75% of salary support for employees of Canadian businesses. Are there any details? No. Is it a promise with a bunch of stuff dangling from the words of the promise? Yes. And it's not until April 1st that we get, again, in air quotes, details of the CEWS. And this, again, emerges through a press release by the Department of Finance that ultimately gets posted to the COVID-19 emergency response website that Canada Revenue Agency has established. And in that April 1st press release, we get kind of the backbone and the framework of the CEWS, what the eligibility is going to look like, how you're going to calculate the amount for your employees, what it amounts to, but still absolutely lacking in terms of draft legislation. So those of us who live in that world of being tax practitioners and really want to know what the details are, what are the traps, what are the triggers, what are the fundamentals for advising our clients, none of that was available, of course, to us until we saw the legislative package that ultimately moved forward on April 14th and received royal assent. And in that, that's when, as they say, the devil is in the details. That's where we really saw the definitive details, which I'm going to talk about a little bit more. And then from that day forward, it's almost been a daily announcement of new programs or enhancements to existing programs. Again, it's governance by press release and news conference. Bill C-14 on April 14th, April 15th, we've got a news conference that announces changes in the eligibility to the CERB, the Canada Emergency Response Benefit, the $2,000 per month income support. Then on April 16th, another news conference announces the expansion of the Canada Emergency Business Account, the CEBA. That's the $40,000 loan program available through financial institutions. And then a vague outline of this thing called the Canada Emergency Commercial Rent Assistance, or the SECRA program. 17th, another news conference announces new programs administered through regional development agencies to support businesses that fall through the cracks. And then today, another news conference announcing support for students and new grads that are affected by COVID-19. So again, we're in a period of time where governance by press release is the order of the day. So I want to take a little bit of time to talk about the stuff that we really know about and we're comfortable with in terms of legislation that has been passed and enacted. And then I'll talk a little bit about some of the other stuff. So the temporary wage subsidy, that was the first thing that came forward for businesses. And it was described as a 10% subsidy But essentially, this is a subsidy entirely funded by the employer. How is it that you get a subsidy funded by the employer? Well, you needed to keep paying your employees and calculating your remittances. But essentially what this allowed you to do is withhold those remittances on a notional salary. And you essentially were able to claw back or hold back up to $1,375 per eligible employee per eligible period, to a maximum of $25,000 per employer. So depending upon the number of employees that the business had, you could get to that number reasonably quickly and top out. So in terms of support for business, this kept some of the cash flow back in the hands of the corporation. How were you able to apply for this? This had really broad eligibility. So anybody basically except, well, I think now there's been another change, which now says even trusts that employ individuals can now also apply for the TWS. So individuals, partnerships, nonprofits, charities, Canadian-controlled private corporations, everybody could apply for this. But you had to have a valid RP or payroll account on March 18th, and you were required to pay eligible remuneration to an eligible employer. So lots of definitions that are tagged on to that. There's really no required application process. There's just an automatic reduction in remittances for withholdings, for tax, CPP, and EI. And the employer is, or the company that you use as a payroll administrator, is responsible for the calculation of this amount. So that was the first program, and that program still exists. So your business does not qualify for the CEWS, and you pay payroll, pay eligible employees. So, and that definition of an eligible employee, also there's a definition in there for non-arm's length employees, which means that if you have someone who's related to the controlling shareholder of the corporation, as long as they're an employee of the corporation, then they qualify for this temporary wage subsidy. Shortly following, in Bill C-14, we had the introduction of the Canada Emergency Wage Subsidy. And what is this program all about? Well, this is essentially the provision, and this is a real cash drop from the government. And it's a subsidy of 75% of baseline remuneration. I'll talk a little bit about that in a minute. Baseline remuneration is essentially, essentially an amount that forms the basis for the calculation as to whether or not you are eligible for the $847 per week for a particular employee. So there's lots of defined terms in Bill C-14. Again, this whole idea of baseline remuneration is one, and that's really, simply put, that's the average weekly amount that gets paid to an employee for the January through March 15th period. And this excludes any period of 7 or more consecutive days that the employee wasn't paid. That's the amount that's needed to determine the weekly benefit that's going to be received by the employee. We take that baseline amount and it's compared to the maximum of the $847 per week, 75% of that baseline amount, and then it's going to be the lesser of the 75% of the baseline amount and the $847 per week. Eligible employee, another really important definition, and that's anybody who doesn't receive pay from the company for 14 consecutive days in the qualifying period. The qualifying period is basically just the claim period that you're making the claim for. Eligible remuneration. Eligible remuneration captures all of the income that the individual is paid. And there have been a lot of questions about whether or not that includes commissions that are earned by individual employees, whether or not it takes into consideration retiring allowances or stock option benefits, or even amounts that are expected to be repaid by individuals. So commissions, yes. Stock options, retiring allowances, amounts that could be repaid by the employees, all of these amounts are not included in the determination of what that eligible remuneration is. And that also lends to the baseline remuneration calculation. The last really important definition that got added under Bill C-14 is this prior reference period. And prior reference period is extremely important as it talks about the period that's used to compare the current period for the decline in revenue. Like, this whole program depends on whether or not the company had a decline in revenue, and it meets the decline in revenue test. And that's the first test that needs to be met before you even can consider application. So prior to the introduction of Bill C-14, the program was based on this notion that you had to have a 30% year-over-year decline in revenue. It wasn't income, just the top line revenue of the corporation. And this was compared to the previous month for the prior year. So we were talking about the first qualifying period, which is in the March 15th to April 11th period. The initial wording around this program was, if you had a 30% decline from March 2019 to March 2020, you're in. If you had a 29% decline, you're out. So a lot of these are a lot of the response in Bill C-14 were the responses were really targeted at some of these issues around qualification, and particularly the revenue decline test. So what we saw in the language was a change to essentially a two-part or a two-option test. For the first period, for the March 2020 period, what I'll refer to as claim period 1, the legislation essentially says if you've got a 15% decline in revenue for March 2020 when compared to either March 2019 or when compared to the average of the revenue recorded in January and February of 2020, you qualify. Same issue though, if you have a 14% decline, you're out. For the subsequent months, when we're determining claim period 2, claim period 3, and so on, you have to have a decline in revenue equal to 30% or more for April when compared to the same month for the previous year. So if we're talking about claim period 2, the April period, you had to have a 30% decline in revenue for the month of April over April 2020, or a 30% decline in revenue when you compare to the average of January, February of 2020. So here you got two options: 15% for claim period 1, 30% for claim period 2, but you have the option of comparing your current period revenue to either the previous year or the average for January and February of this year. That was really in response to things like, well, I'm a startup. I don't have a comparable period in the previous year, or the most significant decline started to occur in March, and January and February were fairly strong, but March again, I was in early part of my business. So, we're looking for options or opportunities for companies to essentially meet this test based upon the realities of their business existence. Some good news that came out of this is that if an employer is eligible for one claim period, it automatically qualifies for the subsequent period. So if you've done your calculation for the March period and you meet that 15% decline in revenue test, you are automatically qualified for the April period. Similarly, if you didn't qualify in March and now you go and do your test for April and you meet the 30% decline test in April, you automatically qualify for May. Now, once you get past that automatic qualification period for the subsequent period, now you have a standalone qualification that's required year over year. Some interesting stuff that came out of this. Bill C-14 gives the finance minister the power to extend the program to September 30, 2020 without parliamentary approval. The program is currently set to end June 6th. And throughout the entire bill, there's references to references in almost every section. You'll find a paragraph that says, and other such changes as the minister may determine. So this entire program is open to changes that can be made by regulation throughout the term of the program. Once you select a method for the revenue decline test, you can't change, so no flip-flopping. You can't use the comparison to previous year for claim period 1 and then use the comparison to the average of January, February in claim period 2. You can calculate revenue on the accrual basis or the cash basis. Accrual basis is the general accounting perspective for financial statement preparation for most entities. And for tax purposes, everyone except farmers and fishermen are required to report on an accrual basis. So what that means is that if you've got accounts receivable, you need to book that revenue on the date that you issue the invoice. That becomes revenue recognition. Whereas under the cash basis, you don't record that revenue until you get paid. So the discussion around whether or not the calculation of revenue includes bad debts, which there's some concern, of course, going forward for collectability on items that have been booked during this period of real uncertainty. The legislation allows for calculating your revenue on the cash basis. So if you think you're going to have a significant amount of, or potentially some significant bad debts going forward, you might want to consider calculation of revenue on a cash basis on the received cash in your jeans basis, as opposed to capturing all those invoices that you've pushed out and now need to be reported for tax purposes. Now, again, this is just for this program. You're still going to have to account for your revenues in the manner that you've always done going forward. There's a number of revenue items that are excluded in the decline in revenue test. For example, extraordinary items. Those are what we call below the line items. So, you know, extraordinary income that comes in as a result of potentially shuttering a division or a plant, or other items that are just completely out of the ordinary stream of revenue that you calculate on a daily basis. Non-arm's length revenue, NAL revenue. Non-arm's length revenue means that revenue you generate by charging related companies, related entities. And then any Q subsidy and TWS subsidy that's received in the claim period, that also gets deducted from the revenue. Now, that's going to be more significant going forward when you get into claim period 2 and 3. But you know, for claim period 1, most significant would be the non-arm's length revenue and the extraordinary items. The legislation came out with some special rules for complex corporate groups, and these are all based on the affiliation rules. There's a set of rules in the Act that talk about whether two people are affiliated or two companies are affiliated. And they're basically providing options for these big corporate groups to be able to, instead of individually having to calculate, they can calculate their decline in revenue test based upon the corporate group, and even on a consolidated basis for two companies that need to consolidate their financial statements. There are also different calculations for pre-existing and new employees, and this is really significant for non-arm's length employees. Suffice it to say that if you're a shareholder employee of your corporation, and you think, geez, it would be a great idea to access some of this CEWS subsidy for, oh, I don't know, my son. So I'm going to set him up as a new employee. Well, new employees that are arm's length, there's a specific calculation that will provide a number. It'll spit out a number that will determine the amount of the subsidy for that new employee. However, for a non-arm's length employee, if that individual has not previously been employed by the corporation, by default, their baseline income is going to be zero. So they're not going to be able to receive a subsidy as a new non-arm's length employee. These calculations for pre-existing and new employees aren't overly technical, but when you've got a large number of employees, it can get to be cumbersome. And for anybody who's interested in a template for doing these calculations, let me know and I can hook you up. CEWS benefits are reduced by any amount claimed under the temporary wage subsidy for the same claim period. So again, this is more relevant for period 2 and period 3. If you were quick to the mark and you signed up for the temporary wage subsidy, the 10%, that's going to reduce any of the CEWS benefit that you receive for that period. Also, the EI work sharing benefits received for that claim period, that's also going to reduce the amount of the CEWS. CPP and EI is refundable to the employer for employees who are on leave with pay. And essentially what they mean by employees that are on leave with pay are those that are essentially being paid but are told, you know, stay home. So they're on leave with pay. That CPP and EI will be credited back. It still needs to be remitted on the salary that's provided, but it'll be credited back on application by the employer. How does this all work practically? How does the money flow? Practically, this CEWS money is credited to the employer's corporate income tax account as an overpayment. So you'll see it as an amount that is a credit in the corporate tax account of the corporation. And if you've got unpaid corporate tax or unpaid GST, HST that's sitting there in the account, the language is that the minister may pay the CEWS benefit. Now, in discussion with some of my colleagues, they're confident that from an optics perspective, this CEWS will flow to the companies that make application, even if they have outstanding corporate tax or GST. And that's consistent with the language that we've seen on the CRA website on deferral of collection action and deferral of penalties, rendering of penalties on collections for GST as well. Now, there are significant anti-avoidance rules that were announced. This is what I call the fear of God. The fear of God component to the CEWS. And what they've indicated here is that at minimum, you're going to be repaying the benefit. there is potentially a penalty up to 50% of the benefit received. There's also, I'm just scrolling to it here, I want to make sure I capture all of it. And there's also the potential for imprisonment of any bad actors as they've been described. Yeah, I can put up the, I have a number of newsletters that I produce that have the details of these issues in them. And I'll point you to my website at the end of the presentation where you can see those details. Suffice it to say that the language being used in terms of the anti-avoidance is pretty strong. And when I first heard it, I just got the impression that once again, here's our government pointing to small business and saying, you know, we think you guys are really a bunch of tax cheats. So we want to warn you right up front that you better not mess with this. And if you do, then you know you're going to be a bad actor. And we're also going to put provision in the legislation to name and shame, which means that they can publish the names of those individuals that are being penalized under the anti-avoidance provisions. Now, people who do abuse this, should they face penalties? Absolutely. Was it appropriate to use the heavy-handed language? I don't think so, but coming from this government, I'm not surprised. All right, let's carry on here. So just a few items of interest. The revenue decline does not have to be specifically related to COVID-19. It's interesting that we didn't see anywhere in the legislation the revenue decline being specifically tied to the loss of business revenue needing to be shuttered as a result of provincial health directives or anything of the like. Another item of interest is that you have to, when you sign up for queues, you have to identify a person with financial responsibility. This person has to be appointed, has to be responsible for the attestation. And the attestation essentially is attesting to whether or not you meet the revenue decline. You don't need to submit financial statements. You don't need to submit internal records. All you need to do is attest to the fact that you meet the eligibility criteria. At least that's the way they're laying it out at this point. But they want somebody to be the front man, so to speak, and the first point of contact on this attestation. And again, I think that this is part of the after the fact compliance plan that they have, and they want to be able to reach out to somebody specifically. Talking to some of my colleagues, there's a real reluctance for us as practitioners to tell our clients, yeah, we'll be responsible, we'll be the financial responsibility person, and be the first point of contact for attestation. And it has a lot to do with the amount of work that we as CPAs are required to do when reporting on particular matters. Just simply reviewing revenue year over year without going through what would be prudent and responsible as a practitioner, things like ensuring that we have appropriate engagement letters, that we have procedures in place, all of those things that unfortunately business owners, translates into fees. So business owners, you should be expected to be the ones listed as the person with financial responsibility for attestation, and then the follow-up, certainly consult with your tax and accounting advisors. Our understanding is that there's approximately 3,000 auditors that are going to be assigned to this program and the CERB to assess after the fact eligibility. So there's going to be a whole bunch of auditors going to be really busy after we get through this mess. And they now have an eligibility calculator online where you can go and click on this link and go and calculate what the amount of the CEWS benefit is that you're going to receive for your company. Now, having gone to this site and looked at it, like so many of the tools that CRA provides, it's a little bit cumbersome. Again, I have a spreadsheet available for anybody who would like it. It's a single page where you don't have to go back and forth to determine your eligibility. This is what happens with the website. You plug in a bunch of information, then they go, okay, now fill out this spreadsheet and come back and put your results into the online calculator. So I have a template. Again, I can hook you up. Just let me know. Our understanding is that application through the corporate My Business account should be open by Monday. And that remains to be seen, but we'll keep our fingers crossed for everyone who's anxiously awaiting this. The CERB is the major program, support program rolled out federally for an individual. For eligible workers, they will receive $500 a week for up to 16 weeks. Eligibility, this keeps changing. So this captures the most recent spectrum of eligibility. Who's eligible? You got to be at least 15-year-old and resident in Canada. You have to have stopped working because of COVID-19 and have not voluntarily quit your job. Or you have to be eligible for regular EI or sickness benefits. Had to have had income of at least $5,000 in 2019 or in the 12 months prior to application. And there were a number of issues around what was income prior to clarification by the Department of Finance. Initially, it was limited essentially to employment income or remuneration, and anything that made up the notion of remuneration, so commissions and the like, or self-employment income. Now, it was rather surprising that I think it was April 6th that I checked the COVID-19 response benefit website, and lo and behold, under their frequently asked questions section, question there was, well, what if I had dividends only in that period of 12 months or in 2019? And the response came back that yes, as long as they are non-eligible dividends from a Canadian-controlled private corporation. No employment for 14 consecutive days in the initial claim period, and expect to have no employment or self-employment income in subsequent periods. Here again, this was later expanded to allow the individual to have up to $1,000 of earned income per month while collecting this CERB. And this was also further extended to include seasonal workers who have exhausted their EI regular benefits and can't work because of COVID-19, and extended to workers who have recently exhausted EI regular benefits and can't find a job because of COVID-19. I can tell you that having dealt with this last issue for a couple of clients, this is something that, I don't know if it's not yet communicated to Service Canada, or there's something in the application process that's a bit cross-threaded, because I've seen a couple of instances where EI benefits have been exhausted subsequent to January 1, and because of COVID-19, the individual can't find a job, but for some reason, they're not coming up with CERB eligibility. So we're keeping our fingers crossed that that continues to evolve. So as I said, we're in a period of time where it's governance by news release and news conference and press release. And here's some of the other things that have been announced during this period. First being the extended EI work sharing program. And essentially, what the EI work sharing program is it just increases the number of hours for that particular program. I believe it doubles it to from 360 to 720. Changes to the Canada Summer Jobs Program. The changes to the Canada Summer Jobs Program was announced as part of the COVID-19 Bill C-13. And those changes, basically, there's an increase in the wage subsidy for 100% of the amount of the provincial or territorial minimum hour wage for each employee. And it also extended the amount of time for the program, recognizing that, you know, kids aren't going to be able to jump into their summer jobs immediately, and they might have to extend the program far into the potentially into the next calendar year. The introduction of for businesses looking for credit, the business credit availability program. There's a loan guarantee for small, medium-sized enterprises through EDC, and that was a program that has about 6.25 million in loans to SMEs that the BDC will provide. And then BDC is also working with financial institutions to provide co-lending programs for SMEs. And again, you can get up to 6.25 million through that program as well. Both of these, or sorry, one is with EDC, Export to Development Canada, and the other one is BDC, Business Development Canada, the BDC Bank. Both provide loans up to 6.25. The Canada Emergency Business Account, this one also has been talked about, I think, fairly significantly. Initially, this program, and currently as well, the program provides a loan to qualifying businesses that of $40,000 up to $40,000, and the purpose of that, of course, is to is essentially to supplement cash flow for expenditure needs. Now, initially, the requirements were that the business had to have had a payroll in 2019 of a total of a minimum of 50,000 to a maximum of 1.5. So on your T4 summary for the business that you filed by February 29th, if the total of all of the wages and salaries paid was at least 50,000, but didn't exceed 1.5 million, you were eligible. So there was a lot of discussion about whether or not this was really providing a fulsome opportunity for small business. And it also raised the question about, all right, what is small business? And in response to that, the Department of Finance, in conjunction with with lenders, broadened the eligibility criteria, and now businesses now only need to demonstrate that they've either paid a minimum of 20,000 or as much as 1.5 million. So initially between 50,000 and a million, now it's broadened to 20,000 to 1.5 million. In terms of eligibility criteria with the financial institution, most of them are doing this all online. You just have to have your T4 summary available, and you can't be in default on any credit facilities with the bank in the last 90 days. You just need to have a business account with the bank, And after that, submit the required documentation, being your T4 summary. And my understanding is it shows up fairly quickly. The Canada Emergency Commercial Rent Assistance, the SECRA. Again, long on promises, short on details. This was announced, I believe, on April 17th, and we have yet to see anything about this program. The promise here is that the program is going to provide loans and other forgivable loans to commercial property owners, who in turn is going to who will then lower or forego the rent of small businesses for the month of April. And the way they talk about this is that it's going to be retroactive. So I'm assuming we're not going to see anything for a few weeks yet. For the months of April, retroactively May and June. Now, part of the complication here is that implementation of the program is going to require a partnership with provincial and territorial governments, because they're the ones that are responsible for property owner-tenant relationships. So stay tuned, and we'll boil this down once we see some details on it. There were also some additional announcements around money available for businesses that fall through the cracks, or emerging businesses, tech businesses, young entrepreneurs, and then rural businesses. All that will be administered through either Community Futures Network, IRAP, through Western Diversification, through WD, or through Futurepreneur Canada. Amazingly enough, there are absolutely no details available on any of these websites about how to apply, what the quantum of the money is available. Again, we're just going to need to stay tuned and hope we see something meaningful. So just a quick reminder about deferral of tax filings and payment deadlines. Corporation, if your filing due date is after March 1st and before, well, June 1st or noon 1st, your filing due date will be June 1st. So what does that mean? Your filing due date for a corporation is generally 6 months after the end of your fiscal year end. So if I had, let's say, a September year end, my due date for my tax return is March 31st. So I would fall into this between March 1st and June 1st period. So now, instead of having to file on March 31st, I now can file on June 1st. So that's for filing. Tax due date. I'm talking mostly here about Canadian controlled private corporations, which for the Chamber, those are our constituents. You either have a 2-month or a 3-month requirement to pay your tax after your fiscal year end. 2 months if you aren't claiming the small business deduction, 3 months if you are. Now, if your tax due period falls between March 18th but before September 1st, your payment of federal corporate tax is deferred until September 1st. Perfect example are those companies that have a December 31, 2019 year end. If you're claiming the small business deduction, your tax due date is March 31st, which falls in that period. So now you can defer paying your corporate tax until September 1st. The one that's probably been talked about most is individuals filing due date extended from April 30th to June 1st, payment due date extended from April 30th to September 1st. For self-employed individuals, the filing due date of June 15th remains unchanged, but what has changed is that the payment due date, if you are a self-employed individual, yes, you have until June 15th to file your tax return, but you have to have your tax paid by April 30th. There's now a deferral to September 1st for self-employed individuals. GST, HST tax payments and remittances. Any GST or payments or remittances, including installments, due on or after March 27th and before June 2020. You can defer these until the end of June. CRA is expecting you to still file your GST returns on time. They've confirmed they're not going to apply penalties for any late filed returns as long as you file them by June 30th. Okay? And that's all I got. And so let's go to the questions. First question is, is the TWS calculated for each individual employee, or can we take the number of employees times 10% of gross wages and ensure that it doesn't exceed 1375 of the number of employees? It is based on a per employee calculation. And again, I do have a spreadsheet that if you want to reach out to me and send me an email, I will send you a copy of the spreadsheet, and it will allow you on for every period, for every pay period, to determine what the amount of that TWS is that you can withhold and retain for cash flow purposes. The second question I have is, what happens if there is enough of a decrease in revenue in April to qualify for CEWS based on comparison to the January-February average, but then things pick up again in May, June to prevent qualifying? Will this be a red flag, or is this okay? I.e., some seasonality of construction business could lead to pickup in May, June. Will this affect CEWS? Simple answer to that is yes, there will be an impact there. But if you recall, the legislation says that if you qualify, if you're calculating qualification, your claim period 1 is April, and you qualify for April, you automatically qualify for May. Okay? So if you do have a bit of a pickup in May, then the issue is qualifying for June. And if you continue to increase, you're really only going to have the 2 period of qualification. So pay attention to that, that provision in 125.7 that basically says, if I qualify in the first period under my calculation, I automatically qualify in the second period. But if you do have a pickup in revenue, yeah, there will be an increase. More questions rolling in, which is awesome. It says, did I hear that the CEWS is required to be paid back by the companies that receive it? If you are not determined to be not eligible, yes, you will need to repay it. And you will be subject to, at minimum, a 25% penalty up to potentially 100% of the CEWS that you receive. Just a note on the business program, the turnaround with RBC was 7 days. They use a visa platform to advance up to 10,000 a day to the maximum of 40,000. Thanks, Howard, for that. Appreciate it. A little information for everyone. Assuming my payroll is within the qualification amounts for CEBA, is there any circumstance that would disqualify you for the full 40,000? I'm not aware of any that would disqualify you other than being offside with the financial institution and being in default for a period within the 90 days. Otherwise, I don't believe that there are any other specific gotchas or traps in the qualification criteria. Here's a quick note from Garnet. Thanks for this. If people identify specific areas they would like me to advocate for policy changes on their behalf, please call our office, 780-467-4944. And you can also reach out to the Chamber through Todd, and he will get any questions or comments that you have for either myself or for Garnet. I'm actually in touch with Garnet on these matters as well. So I can act as a conduit as well. Garnet actually forwarded me the transcript and the voice transcript of a question he was able to ask in the House of Commons. And they basically came directly out of some conversations that he and I had. And we were really lucky to have Garnet as our advocate in Ottawa for business and for the residents of Sherwood Park. Thank you, Garnet, for your service. I'm a sole proprietor with no employees. Income has dropped a lot. Can I apply for CERB? Good question. And you really have to ensure that in the back end of this, when the compliance period happens, that you have well-documented evidence as to why you don't have any income. I have a client that operates in the realm of auto wholesaling. And he's not a sole proprietor, but he's a corporate entity. His business revenue has essentially gone to zero. And the reason, of course, is you can't have auctions in this environment. And that is how he generates his revenue. So if you're able to document why it is you have no revenue during that 14-day period in the month of March, then you should feel comfortable applying for the CERB. Again, assuming you qualify for under the other eligibility criteria. Another comment, more details on the CECRA would be great. Brad and Garnet, the first of the month is around the corner, that's right. And it's such an unknown for both the tenants and landlords right now. I absolutely agree with you. Thank you for bringing that up. Again, I sit with my coffee in the morning watching our PM emerge from his cottage, and I'm often amazed at why it is we have these announcements with absolutely no substance to support them. We saw this with the CEWS, where businesses were whipped into a frenzy with absolutely no details around the CEWS. We are now in the same position, absolutely the same position with the SECRA. We are getting businesses amped up and excited about the potential for some rental relief, but absolutely no details around it. So I think it's a little irresponsible at times, but you know, I'm happy to see that there is some footprint that will ultimately evolve into a framework. I'm hoping, anyways. I think that's it for questions, Todd, and I think we're pretty close to being right on time. Presentation is up the chamber website, and my details are on there. If you shoot me an email requesting one of the templates, I will get one out to you immediately. So,
Hi, Garnet.
Hi, everyone. Sure, yeah.
So maybe we're just out of time, so maybe you got a minute here or so?
Happy to just share, again, thank you, Brad, for great presentation. I mean, Brad summarized well, I think, the particulars as well as the sort of overarching narrative, which is, you know, the government is trying to respond as quickly as they can, and the effect of that sometimes is you have announcements without a lot of clarity around them. I do feel as the opposition in these times that we've had the opportunity to push the government and create some policy changes on some issues, and we're not getting everything we want, but our voices are being heard eventually to some extent, and that's why the information I hear from all of you, and Brad's been very active keeping me informed of things he's seeing and hearing, but the information I hear from all of you is very important. As programs come out that may not have been fully thought through in all the details, knowing exactly who might fall into what gaps and how we can fix those gaps. We've been able to negotiate these sort of weekly accountability sessions in Parliament, so although we're not meeting in our regular fashion, we have opportunities to ask direct questions about the construction of these programs. One of the things we're pushing for is we we've made the case that businesses should be able to keep the GST that they've collected. We think that's a fast, simple cash injection, but that has not been announced, and I have no way of believing necessarily that it will be. So just to put that out there, and I look forward to your continuing feedback. Thank you again for this opportunity.
Thanks, Garnet.
Yeah, thanks, Garnet. Appreciate that. And thank you, Brad, for such an informative presentation and for answering the members' questions. Your knowledge and experience in this area, and especially your time today, is very much appreciated. I would also like to thank the members today for participating. And as always, please contact me and let me know what you think of our presentations. And please contact us at the Chamber anytime for assistance. And you can email us at info@sherwoodparkchamber.com, and we can take a look at your comments, see if we can improve upon this or any other questions you may have. We're here for you, and take care. Thank you for being a member. And this concludes the presentation. Thank you.
Sorry, Todd, just before we sign off, I mentioned the newsletters that I have that are essentially dig into all the details of what we talked about today. I've been having some issues with my website, but I should have it up by tomorrow. They'll all be posted on the website. And in addition to that, I'll be putting out a new one today on the changes that were, or the programs that were announced this morning. So you can look for those as well. Thanks, everybody.
Thank you. Have a good evening.